It's Friday. And you know what Friday means? Friday means we're having a lecture. All right. Well, normally we don't do that. Normally we have Excel Friday, but the schedule's a little bit different. So just as a reminder, we talked about this a little bit on Wednesday. Today we're going to be doing Chapter 7, our final content chapter for before the first exam. We'll be doing the homework for Chapter 7. Chapter 7 homework on Monday. It'll probably be a shorter class because we are only going to have that. So that's all we've got set up. We've got our exam review on Wednesday. Exam review will be going over the study guide and the practice exam. A few notes on that I've already said, but I want to reiterate. When we have the review, I will not go over the study guide point by point. It is a long study guide. I will go over the things that I think are important and relevant that you should focus on. But anything that's on that study guide is viable for the exam, so you should study the entire thing. I do recommend that you come to class with questions about information that you're not certain about. So if there's something in the study guide, you're like, I wonder what Dr. Barnes means about that. Come prepared to ask about that because I may cover it in the study guide review, I may not. Practice exam, work the practice exam ahead of time. Make sure that you're familiar with what you know and what you don't know so we can actually be on top of that and you can focus on the things that you need to focus on for the exam. And then first exam, 1 week for today, from today. So 100 points, 20 questions, 20 multiple choice questions, 1 problem with multiple parts. That's basically what we need to know. So let's go ahead and we're 7 minutes into class already because I spent some time talking to people at the beginning, but let's talk about the conversion process. And the reason why I'm not too worried about it is because conversion process is something that everybody should be already familiar with. This is basically for everyone in this room, this is going to be Accounting 221 reiterated. For those of you who are accounting majors and have taken the 319 cost accounting with Dr. Otero, that's going to be a kind of a reinforcement of that. Now, I give Dr. Otero a very hard time. You know, for some reason, I've talked to students and students have said Dr. Otero can be kind of intimidating at times. And I've never found that, although I probably punch your buttons more than anybody. So, but my comment that I always make to Dr. Otero is I don't understand how complex cost accounting is. Basically just materials, labor and overhead. Once you know that, the cost accounting is done. She'll tell you, first of all, that managerial and cost accounting are not the same thing, which is dirty lie. They are the same thing, okay? But she insists there's a lot more to it. And students must agree with her because they do a lot of work and a lot of diligent effort in her class. So if there's something I'm missing, I guess maybe there's more to it than what we're going to talk about today, but I'm just going to focus on the materials, labor, and overhead because that's what I know. Obviously, I'm being facetious. I've taught 221 before, so I do know a little bit more about it than that, but that's going to be our focus. We're going to talk about conversion business process. And this is the manufacturing environment that we've actually set up already for our AIS framework. So what does this mean? What do we mean with conversion business process? The answer is this is effectively going to be our inventory process. That's an easier way for the vernacular. Now, I didn't put inventory process up here, but you can think of it as kind of shorthand in your head. You can think, all right, now we're going to talk about inventory. And why is that so important? Well, I'm glad you asked because I've got a slide entirely of that. We examine the primary organizational process areas, revenue and purchasing. And the good news is that if you learn one, you basically know the other because they're mirrors of one another. It's just what is the role the organization plays? Are they playing the role of the supplier? Or are they playing the role of the customer? And so the revenue process, the organization is providing the goods and services, and the role of purchasing, they are obtaining goods and services. But most organizations usually recognize other related process areas, which include inventory, human resources, or payroll, investing, and financing. I will allude to this again because there's a lot of accounting students in this course. When we get to auditing in a few semesters, next semester or a few semesters from now, we'll actually have multiple business process areas that overlap in this. But the primary ones that we want to focus on are definitely going to be revenue and purchasing. There is going to be a connective tie between those. And a lot of times these overlap within these other business process areas. I think the easiest distinction to make, the easiest connection to make is going to be that inventory step, which is why we're talking about that today. So the question is kind of a rhetorical question. What happens in between revenue and purchasing? Maybe a better way to frame this question is, what happens between when we purchase the items that we're going to resell for use and then when we eventually sell those items? If we're in a retailing environment, it's very easy. We buy the items, we break them down into smaller components, and we sell them. So think about the way Walmart works. Walmart buys massive quantities of inventory, like massive pallets, like they may buy 1,000 units of inventory. Then they take them off the pallets, they put them on shelves, and then individual consumers come in and they purchase 1 or 2 units at a time. That's all the conversion process is. Now, that would be easy and that would be the simple part, and that wouldn't be any fun because we want to talk about something far more infinitely complex. So let's talk about manufacturing. This is one that where I was referring to the consistency of 221 and what you've already learned with respect to cost and managerial accounting. So this is figure 7-1 from the textbook, 7.1 from the textbook on page 196. And we look at this, and you should look at this and say, this looks very familiar. I've seen things that are similar to this. And the answer is that yes, you have. The nomenclature that's used in this particular diagram is not necessarily the same as what you've seen before, but it's exactly the same steps as what you talked about when you talked about the conversion process in 221. So what do I mean by conversion process? Remember, I was making the joke that I always tease Dr. Otero, and I say, Dr. Otero, managerial accounting is just materials, labor, and overhead. So those are the three product costs that you learned back in the manufacturing environment in 221. Direct materials, direct labor, and manufacturing overhead. And so direct materials emanate from the idea that they're going to purchase raw materials to convert them into some sort of finished good. Now, the example I always use, because it's very, very simple, is I point at that table over there, and I say, what are the materials that go into the table? There's probably a lot of them because it's actually a pretty nice table, but I'm going to say wood goes into the table. That's obviously a basic ingredient. Now, if you really want to get technical, you can look and there's particle fiber in that table. So it's probably not a piece of wood. It's actually particle board that was pressed together. And if you're going to be very technical about that, yeah, you got me. All right. But let's just go with a simple example and assume for sake of simplicity that this is a table made of wood and just wood and whatever other things that are holding the wood together. When you buy the wood, it's not in the form of a table. It's not the shape of a table. It's whatever buy it. Like you usually buy it in planks or pieces of lumber, whatever it might be. You actually have to go through what's called a conversion process to turn that raw material into a finished good. What does conversion take place? Does everybody remember the concept of conversion cost back from 221? Maybe not exactly, but you remember that term saying, I remember hearing that, Dr. Barnes, it's ringing a bell. What is a conversion cost? Well, conversion costs were just direct labor and manufacturing overhead. Or the way that we term it is the cost that it takes to convert a piece of raw material into a finished good. So what do you have to do to turn a piece of wood into a table? You've got to have somebody who knows how to turn it into a table. Plus, you've got to have those additional costs that are ancillary, like the glue that holds the wood together or the nails that you don't necessarily account for as direct materials. Those incidental costs, the cleanup, the sweeping of the floor after you've done working for the day, like the janitorial costs, all those additional costs go into that production, that manufacturing, that conversion. So that's what we're talking about here. And again, that's just kind of a refresher of what you learned back in 221 and to some degree what you learned in 319 if you took that course. So remember that there's three stages of inventory that we're accountable for. There's the ones that we've already talked about. We talked about raw materials and we talked about finished goods. Raw materials is basically what comes in as part of our purchasing process. And then finished goods are what we're going to be selling as part of the revenue process. But remember, we had a terminology for goods that are in the process of being manufactured. Does everybody remember work in process inventory? So work in process inventory is basically saying it's not raw materials. It's beyond the phase of being a raw material, but it's not quite finished goods. It's somewhere in between. Okay, very fast phases in between. Now, I want to set your mind at ease. A lot of the things that you had to learn about for calculating raw material, or sorry, work in process inventory, we're not going to focus on the journal entries or the calculations or anything like that. This is all conceptual at this point. This is going to be kind of given to you, but you do need to still remember some fundamental concepts related to that. So first thing we need to remember, when we talk about work in process inventory, it's comprised of our three product costs, okay? It's comprised of direct materials, direct labor, and manufacturing overhead. And we can actually see that in these transactions here, right? We've got a purchase of raw materials inventory, that took place earlier. And then that's actually going to be in the purchasing process, which I kind of preview that. That raw materials inventory gets issued to work in process inventory. So this is our direct materials that goes into this, all right? A little bit later on, we issue labor in the process. So we can't just say raw materials, throw pieces of wood on the ground and have the wood automatically become a table. That would be really great. And it'd be great if AI can do that in the future, but we're not quite there yet, all right? There has to be some labor that goes into converting that wood into a table. So we have some labor that goes into that, and that's part of our second process. And then we've got this allocation of manufacturing overhead. So that was actually the focus of the first part of 221. That was something that students always just kind of like saying, why are you tormenting us with this, Dr. Barnes? And I say, that's what the book tells me to do. But manufacturing overhead is this idea that there are all these other costs other than direct materials and direct labor that we have to account for, like janitorial services, utilities, like additional materials, indirect materials costs, things along those lines. So we see all three of those in here: direct materials, direct labor, manufacturing overhead. There's a few other things that are thrown in here that are not really as relevant. Like you'll notice they have payment of manufacturing wages. I'm not saying that's not important, but it's not relevant to the process because that's external process. That's part of payroll. But we would need to know what wages need to be paid. I don't like the terminology here, and I will tell you right now, in traditional vernacular, the way we would the terminology used for this would probably be salaries payable. For some reason, they want to use manufacturing wages. I'm not sure why they got away from the payables in this book. But I would term this as salaries payable if I were going to ask you questions about this, which probably tells you that I'm probably not going to ask a lot of questions about this. I do expect you to know that. So anything you see manufacturing wages, you should think salaries payable. This is where we pay the salaries. This is where we incur the salaries. Also a note, something that I will say 99.9% chance that I won't ask you a question about this, but it does help for the intuition in this diagram or the intuition of these transactions. When you see debits to manufacturing overhead, recall from 221 that those are actual overhead costs. Those are actual overhead costs that have been incurred. Again, we're talking about very high conceptual level detail here. I'm not going to have you do the calculations for the differentiation between actual and overhead costs. Like I'm not going to say, was this over allocated or under allocated? That's a cost accounting course question. This is not a cost accounting course. We just need to understand the fundamental concepts and how they relate back to this. Now, if you still remember how to do over allocation, under allocation, kudos. Okay, that's great. Okay. The more knowledge you hold on to, the better off you are. But I'm not going to ask you that on an exam. The 99.9%, you're saying there's a chance, and I'm saying no, there's very unlikely a chance. The only reason I don't say 100% is because there's a possibility that the words manufacturing overhead may appear on the exam somewhere. You do need to understand the difference between actual overhead and allocated overhead. Does everybody remember the reasons for actual overhead and allocated overhead? So actual overhead is basically the actual cost that occurred. Allocated overhead is the speculation, because many of our manufacturing overhead costs don't occur until after the fact. Like, for example, everybody pay utilities on their places where they live. Okay, so you got the utilities bill. When do you usually pay your utilities bill? Like the utilities bill for February, when are you going to pay that? Probably sometime in March, okay? As a business model, we know that we operate on accrual basis of accounting, which accrual basis has a thing called the matching principle. Everybody remember the matching principle? Matching principle said that we recognize expenses in the period that the revenues are generated. So if we're a business and we're recognizing utilities, we want to recognize our expenses in the period in which those expenses related to the relevant revenues occurred. So that's the whole basis for why we do allocated overhead, because all of those expenses related to overhead have to be recognized in the period. We make this weird estimate, and it's all the basis of accrual-based accounting. And that's basically where I start getting to a rant about how accrual-based accounting is destroying our society because it's the source of fraud, it's the source of estimates and all these things. I'd say we just all be better off with tax-based accounting. And then I realized I recommended tax to somebody and I just kind of shrivel up and die. So there's actually, if you've ever heard me rant about accrual-based accounting is kind of non-intuitive and insensible sometimes, but it is what we've learned. So that's what we're going to talk about. So, okay, we're going to keep going with that. And then we have the transfer of the work in process. Once it's done, it goes to finished goods, and those finished goods are what we're going to sell to our customers. So again, purchasing occurs before the fact, revenues occurs after the fact. This is what's occurring in the middle, all right? And the term conversion suggests the process of transforming those purchased goods and services into goods and services for sale, which is basically our managerial accounting. So if you remember every single detail from 221, you should have no problem with this section of the course, okay, with this particular chapter. If you don't remember it, that's okay too. You don't have to remember everything. You just need to remember the things that I'm about to talk about. All right, so let's go ahead and talk about the conversion process description. And if you download these slides early, I do some copy and pasting from slides to slides, and I actually copied and pasted some information from purchasing process. So if you have an older version of the slides that says purchasing process here, knock that out, so it should say conversion process description. And that's actually the correct page reference. So when the quantity of inventory item drops below prescribed levels, production of new inventory occurs. Now note, this is bypassing the purchasing process step, okay? We're not dictating how much raw material we need on hand. We're assuming the raw material already exists on hand. If the raw material falls below a certain level, that's the purchasing process step to say, we need enough materials so that we can actually manufacture our inventory. This is the step where we say, we assume that we've got goods on hand. Now we need to know, are finished goods at a acceptable level? If the answer is no, time to make more finished goods, time to make more inventory. Start of production raw materials are transferred to work in process inventory. Based on the stage of inventory production, additional materials and labor are assigned to work in process. Here's comes our statement of overhead, which is overhead, including indirect materials and indirect labor, is also allocated to work in process. And upon completion, the work in process inventory is transferred to finished goods inventory. That's a very simplistic narrative, and it's not particularly difficult as long as you know something about managerial accounting. If you feel like that your knowledge in this area is pretty strong and that you still remember this should not be particularly difficult to understand. What is kind of interesting is how we're actually going to depict this in our BPN diagram. So let's go ahead and take a look at that real quick. So this is page 198 in the book. This is the single lane diagram, which as before, this is the one that you do need to be responsible for replicating. And I want to clarify something. These items and brackets on the diagrams, I would expect you to be able to replicate that information as well, because that's relevant information. So if you go back to the revenue and the purchasing BPMN diagrams that are single lane diagrams, you're also responsible for these items down here as well. This one's a little bit more, got a little bit more depiction in the diagram. The BPMN diagram itself is very easy, okay? We authorize production. Once production's been authorized, we issue raw materials, okay? As the work is performed, we add direct labor and indirect and allocated overhead to the work in process. And then once the production is finished, once the finished good is developed, we move it to finished goods inventory. That's really all there is to this diagram. But one of the low-hanging areas that you will need to know is you'll need to understand how does this relate to our transactional areas from a few slides ago. Remember all those transactions we looked at, the journal entries? Say, I remember journal entries in 221, Dr. Barnes, and my Horde instructor, if it made me do T accounts and to track this. I don't know if maybe that may be the case. There's a few people in this class who actually took 221 with me, so that they do know that I made them do T accounts, which I apologize profusely. You know, if you're still traumatized by that, no T accounts in this particular course. So you got that to look forward to. But I do remember that I made a few people do T accounts in my 221 class. So my apologies for that. I thought it was a good idea at the time. Anyway, yeah, if you're traumatized by the journal entries, we do need to talk about those. We do need to talk about transactional analysis. So what's going on here? So issue raw materials. This is basically recording the transfer of raw materials inventory to inventory work in process, which as we looked at before, that's just this first step. We've already got the items in raw materials inventory. It's just a reclassification. We're moving them out of raw materials into work in process. First step. We can ignore this second transaction right here, because again, that's just a payable on accounts, or sorry, just a payment on accounts payable. I don't know why the book includes this here. I think they have a narrative that they're trying to provide that's not actually relevant to our diagram. What is relevant to the diagram is going to be this one right here, this work in process inventory. And again, I said, think about this as accounts payable, not manufacturing wages. And then also this one over here, work in process inventory, manufacturing overhead. That recognizes the allocation of overhead, You can, for the most part, ignore the actual overhead costs. We're not going to deal with those during the conversion process. We are just going to deal with the assignment of labor and the assignment of overhead, which for work in process is allocation of overhead. So going back here, issues of raw materials, then we do the perform work. This is where we add direct labor. That's that third transaction. And then the work allocation of overhead work process, that's the sixth journal entry. So right now, we've got this one right here, this one right here, and this one right here. Those are the ones that you need to remember, because those are the ones that are depicted in the diagram. And then finally, we got the completion of production. So what does that mean? The good is done. We can actually sell it to a customer now. It's in complete condition. That's where we reclassify it. It's not being work in process inventory anymore, but now being finished goods inventory. That's this final journal entry right here. So two of these journal entries are super simple, super simple. The first one is a reclassification entry from raw materials to work in process. Remember, we debit work in process, credit raw materials. And the last journal entry is effectively the same thing. It's just a reclassification from work in process to finished goods. So the ones that you really need to know are going to be that journal entry to record direct labor and the one that recording allocated overhead, which is basically just a credit to manufacturing overhead. Now, the interpretation of this is going to be not as important. Again, like I said, this is not a cost accounting class. It's not a managerial accounting class. But you do need to know how this relates to this diagram right here. Right? Simple diagram, but be able to understand how it relates back to the transactional steps. And this is a little bit more of a challenge than the previous ones, because remember, we talked about this in revenue. Revenue only had two sets of transactions. You had the actual revenue recognition transaction, which of course was two parts. They got that sales and the accounts receivable, as well as the cost of goods sold and the inventory. And then you had the cash receipts. So there's only two sets of transactions there. And then with the the purchasing process, it was very similar. You had to recognize the receipt of the goods, and then you also had to recognize the payments that you had to subsequently make. This one's a little bit more difficult because we have 4 different transactions and we have to be able to recognize where they fall in. There's 1 here, 2 transactions here, and then a single transaction here. So being able to recognize that, really, really important for interpretation purposes of the diagram. Now, obviously, we're talking about BPMN diagrams. This is a simple version. And as I said, you're responsible for replication of this. If I ask you a question and if I provide a narrative description, I would be able to expect you to be able to turn this right here into this right here. But this is not the only level. We can talk about how we go past this, and we can talk about expanded BPMN diagrams. So this one's pretty interesting in the fact that this is just a single pool diagram with multiple departments. And I think that the depiction of multiple departments is even kind of a challenge because it actually just says that there's an inventory manager versus conversion employees. Now, this makes a little bit of sense if you think about the warehouse being separate from the factory, which I don't necessarily think about it that way. But if we got a warehouse where they're constantly monitoring inventory levels and they're sending orders to a separate department saying, our inventory levels are not at where we need to be, we need to manufacture more of this particular item, then this would be a separate department area. But the simple purpose is that the only thing that the inventory management does is they authorize production, and then when production is finished, they update inventory records. Everything else is pretty straightforward, okay? We just got to set up a transaction. Now, there's some different activities that occur in this BPMN diagram that are interesting to talk about, okay? So I want to talk a little bit about the gateways. I'm going to leave this other gateway till we get down here at the end, but it talks about setting up a batch. Does everybody remember the term batch from 221, what batch means? We didn't have that in our original diagram. So we got this thing batch. It's like, I always used to joke about what does a batch mean? So when you whip up a batch of pancakes for the employees to enjoy because they're having a long shift, okay? That would actually be the type of batch processing I can get behind, but that's not what we're talking about here. So we're talking about most manufacturing environments. Do they manufacture one good at a time, or do they manufacture multiple goods at a time? Well, if we're talking about Boeing, you may say it's one airplane at a time, okay? If we're talking about someplace like General Mills, which is a cereal producer, they probably make multiple boxes of cereal at a time. So they've got multiple steps, okay? So that job or process scenario. But for the most part, we're going to assume multiple items at a time. A batch is saying that we've got multiple units being processed simultaneously. So that's setting up the batch, okay? Issue raw materials, we have seen that. Perform the work, we inspect the work. This is a new activity here, which I think is interesting because this is not what we had in our simple diagram. But does it make sense to say that we should inspect the work and probably go back and fix any problems? Yeah, if you are working on a cereal manufacturer line and you see a whole bunch of boxes that come through and there's no cereal inside, you probably don't want to sell those to customers. Customers tend to get very upset when they buy empty boxes of cereal, okay? So we probably want to make sure that that's actually met. We want to fix the problem, discard any errors, and issue any raw materials to fix the batch and complete it. If the batch is done, then we can move on. If it's not, then we have to go back through the process until the batch is done. If everything, all manufacturing, if there's multiple batches, then we can actually say, all production is necessary to be done, be done. And I really like this because this is actually multiple gateways, and they do close the gateways, but they're not necessarily right next to each other as intuitively sensible. But I do think this is an interesting interpretation of this. So that's where we basically say, once we've completed production, we can update the inventory records and move it into the warehouse. Now, again, this is far more complex than I would be expecting you to be able to replicate on the exam. But I think interpretation of this is actually very valuable because this is probably more realistic of what we would see in a true manufacturing environment. There would be questions about inspection of the work. There would be questions about, has the batch been processed? If there are multiple batches, how many more batches do we have to process? All of these would come up within the activity diagram. But this is where you need to focus your efforts on. You just need to be able to interpret what's going on here if something like this came up on the exam. All right. So everybody's favorite topic. Now we're going to get to the UML diagrams. And the good news is that the UML diagram is not as complex as you might think. It does take some interpretation, and there's some terminology that's used that's a little bit confusing. So we're going to try to take this a slow step-by-step process. So let's first of all talk about the process summary. It's on page 202. All right. So inventory levels drop below a certain point. Inventory is authorized for production. Quantity of inventory is produced, and raw materials to be used is determined based on existing finished goods inventory. Then raw materials are issued for production. Materials used to document and bill materials. And labor is occurred in production. So it's important to note that in the summary, I simplified it. It only includes assigned events, which excludes overhead. And the reason why is because overhead is an allocated resource, not an actual resource. So in that particular scenario, we're going to kind of leave that around or leave that alone. So this one gets really, really confusing. And I think the depiction for the UML diagram is the least intuitive for inventory or for this conversion business process as the other ones. So let's go ahead and see if we can figure this out. We can actually rationalize this, all right? Because when I start asking about resources, events, and agents, some of these are going to be straightforward. Some of them are going to be like, okay, I'm not real sure, Dr. Barnes. Let's work our way around it. Let's start out with the resources, all right? There are two very, very obvious resources that we're going to classify within our UML diagram. That's going to be the inventory that's coming in and the inventory that's going out. So we're going to have our raw materials, and then raw materials is eventually going to be converted into finished goods. Now, you could make the argument, Dr. Barnes, those are effectively the same thing, and you would not be wrong. Could you simplify the diagram a little bit more and just say products? The answer is absolutely 100% yes. For our first diagram, though, we're going to kind of leave it. We're going to say, let's just go ahead and have raw materials as something we want to identify coming in, and finished goods is something going out. Because they are separate items, even though they do have conversion. It's just based on their level of conversion. The reason for this is when we get to the joint UML diagram, that's all three processes together, we are going to separate out the nature of the inventory. That's why we have the separation of inventory. Then let's talk about the agents. The agents is pretty easy. So who are our lone agent in this particular diagram, you think? So remember, in our previous diagrams, we had internal parties and external parties, okay? Who are our internal parties? What do we label those as? Who works for an organization, okay? The employees, okay? So that's going to be our internal party. Do we have external parties involved in the conversion process? No, there are no external parties. So we have one party of agents, that's our employees, okay? Now, let's talk about the events, because the events kind of get a little bit. By the way, I skipped something I wanted to mention, okay? Somebody may say, all right, Dr. Barnes, you mentioned the resources, but you forgot some of the resources, okay? You mentioned materials, and you mentioned finished goods, raw materials and finished goods. You didn't mention labor in there, and you didn't mention overhead. And your answer is you're correct, okay? Could those be classified as separate resources? The answer is yes. There's a couple of reasons why I do not include those in the UML diagram. The first one is for a very general reason. The fewer the resources we have, the easier it is to interpret. The second one is a little bit more intuitive. Do we have to include labor and overhead in finished goods? Like, is it possible for us to achieve finished goods without labor and overhead? Let me ask you this the easy way. So I'm seeing a lot of puzzle questions, okay? Could I take a piece of wood, put it in the middle of the floor, and come back a day later and have it magically become a table? Not unless somebody in this room said, really want Dr. Barnes to be happy because it's his birthday tomorrow, so we really want to give him a nice present, so we're going to make a table for him out of this piece of wood. If you did that, thank you very much. That's obviously nice. It actually is my birthday tomorrow. But yeah, so if you want to convert a piece of wood into a table, I guess that's great. But normally speaking, okay, absence the intervention of well-meaning AIS students, a piece of wood will not convert into a table by itself. To be a finished good, we have to have the inputs of labor and overhead to do that. So within one of our resources, which you said finished goods, intuitively, it includes labor and overhead, because that we have to have those items to be included to become a finished good. So it is included there as a resource. It's intuitively included. All right. So our events. The very first event that we're going to focus on is we're going to focus on this idea of production authorization, because the very first thing that's driving is that we're saying, look, inventory levels reach a certain point. New inventory is authorized for production. So we're going to have a production authorization step. What all is included in production authorization? Well, we need to have a step that includes the issuance of materials and a step that includes the issuance of labor. So both of those are going to be items that are included in events as part of that process. So keeping that in mind, let's take a look at the diagram, and then I want to explain some things, because this is by far the most confusing of the UML diagrams we're going to talk about, okay? So here's our raw materials and our finished goods, and like I said, labor and overhead are implicitly included in finished goods, because we cannot have finished goods without those inputs, right? Here are employees over here for agents. So what do we have over here? We've got a production authorization in the center, and then we've got material issuances and labor issuance over here. Basically, whenever production authorization takes place, at some point during the process, material is going to have to be issued and labor will have to be issued. Now, there's some interesting things in this diagram. Some of this is fairly intuitive. You see the associations, okay? You see the multiplicities. By the way, I do want to mention one multiplicity that's kind of confusing. It looks like they've got all their multiplicities input, except there's one missing right down here, okay? I do not think that I think this was actually missing a multiplicity was intentional, because of shorthand in UML diagrams, if you have the same multiplicity on both sides, then you just put one multiplicity here. And I did the analysis and I said, okay, this is actually a 1-to-1 on both sides. So I think that's why they didn't include the one-to-one multiplicity. I'm not going to say that that was intentional because that diagram we looked at on Monday for that was missing multiplicities, those were definitely not the same on both sides. I think that was an oversight, but I think this one was intentional. This is a one-to-one multiplicity on both sides. All right. So the terms that are going to come up here that are a little bit weird, this is actually from the book, and I do want to clarify some information in here because this is a little bit confusing. So bill of material and labor plan, these actually represent associations that could be further depicted by conceptual structures of those names. And we're actually going to see the bill of material and conceptual structure here shortly. So I don't want you to get confused about that. The only reason those are included is to kind of preempt that by saying, if we wanted to further expand this UML diagram, we could include a bill of materials conceptual structure in between raw materials and finished goods. We could also include a labor plan conceptual structure in here in between finished goods and labor operations. Now, the good news is you don't need to be responsible for that. This is the replication diagram that you need to know for the UML diagrams. But I do want to talk about this thing called a duality, which is a little bit confusing, okay? First of all, you do not need to include the word duality if you replicate this diagram. It's not necessary. The only reason they include duality is it represents and explains the relationship between materials issues and production authorization and labor operations and production authorization. Duality basically says that the association can move in either direction, okay? And what that means is that we can start with a production authorization, and then that production authorization would naturally result in a materials issuance at some point in the future. It is also saying that say that we have a materials issuance, then that would necessarily have to have a production authorization because you can't issue materials in any other situation. So we could start with the production authorization or we could start with the materials issuance. Either one of those are viable. That's what duality represents. Am I going to test you on that? No, this is only for explanation of why this diagram looks like that. So if you come back and look at this diagram and say, I'm confused about duality again, you can come back to this point in the lecture and say, oh yeah, you discussed this whole thing. It's really not important, but now I understand. Now I know, and knowing is half the battle. That's what G.I. Joe would say. All right, so yeah, that shows how old I am. All right, so yeah, when we talk about this diagram, let's go ahead and get into the details of the multiplicities here. So we've got some multiplicities that are represented and some associations. So let's go ahead and look at some of the ones that are depicted in the diagram. And these are the ones that are notated in the book. So we've got to start number one. We got production authorization employees. Okay, so employee can be involved in zero production authorization. So we can have an employee that has no responsibility for production whatsoever, or we got an employee responsible for multiple production authorizations. So we have an employee that's actually that's their job. They are responsible for the inventory manager responsible for authorizing the production authorization. So zero to many. Production authorization can only be authorized by one employee at all, one and only one employee. All right, so that's a very simple interpretation of this one. Moving over to two, all right. Production authorization results in one batch of finished goods and only one batch of finished goods. Finished goods can have zero production authorization, okay, so that's actually a little bit non-intuitive, but we could say that finished goods did not have a production authorization associated with it, especially if we're talking about materials that go directly from being a raw material to finished goods, like retail inventory. Or we could have multiple production authorizations associated with types of finished goods. All right. Three, employees can be involved in zero or many material issuance. That's the same logic behind the production authorization. Just to save time, I'm going to say this association exists for labor operations as well. But a material issuance can only have one and only one employee. Here's an interesting one. Let's go to jump to 5. I'm going to come back to 4 here in just a second. But it says labor operations can involve one employee or many employees. Does that make sense to everyone? Because you'll notice that we only have a one-to-one for these other associations, but this is a one-to-many. So a difference in multiplicity. Is it possible that we could send more than one employee to actually work on a project? It's like, no, that's just way too many employees, Dr. Barnes. Let's just keep it simple. No, we could have multiple employees, especially if it's a big project and it's a large production. That's why we have a difference in multiplicities here, because the employees can actually be numerous in a labor operation. And then we have number 4 over here, okay? Number 4 is kind of an interesting interpretation. So raw materials are associated with one batch of finished goods or many batches of finished goods, but finished goods can have zero raw materials or many raw materials, which again goes back to the idea that some of our finished goods may come in a finished state if we buy them directly from the retailer and we use those in production. Okay, this is making an assumption that's not a true manufacturing environment. We could definitely make some arguments about these multiplicities. We could say if it's a true manufacturing environment where nothing comes in as complete finished goods, then this may be a 1 right here and this is a 1 right here. Again, it's not important what the multiplicities are. It's important, can you interpret the multiplicities given the situation that we're operating in? So yeah, those are a little bit less intuitive. Those are a little bit hard to interpret. Again, this is a more challenging diagram than the one we looked at for revenue purchasing. Nevertheless, you do need to be responsible for understanding how these relationships exist and be able to interpret from the narrative what the explanation is. Now, I do want to reiterate a few points, okay? There could be additional activities that are included, or additional classes, I should say, my apologies, additional classes that are included in this diagram. I strongly recommend that as you're preparing for the exam, that if you can minimize the number of classes given the narrative, that you should probably do so. So could you include labor in here as a resource? Yes, okay. What happens when you include labor? You have to include all the associations that labor would be implicit with, okay? Which is not given in this diagram, and I don't plan on giving it. So if you have the choice to include labor or not include labor, I would suggest don't include labor as a resource, all right? Could you include the conceptual structure bill of materials here? Yes, we're going to look at what that looks like here. What we're going to notice is that adds another level of complexity because we have to add additional multiplicities and additional associations. So keep in mind, this is simple. Even though this is very, very complex relative to what we've talked about before, this is the simplest level. This is the one that you need to be prepared to answer. All right, this one I want to talk very, very quickly about because this is kind of our expanded UML diagram. This is a little bit different than the UML diagram. There's only a couple things that I want to talk about, okay? The reason this is a different diagram is this actually includes that conceptual structure that I talked about. And it actually includes it doesn't include that labor plan that was included as a possible conceptual structure here. In fact, it actually eliminates the labor operations for products entirely, which I'm not certain about why they do that. But it does include another conceptual structure of product categories. That one I don't need to talk about. We've seen that already in multiple different scenarios, both in revenue and purchasing. But I do want to talk about this bill of material, and I want to talk about this concept of type image, okay? So why did this get included as a conceptual structure when it was just basically implicit in the previous diagram? This statement that says bill of materials are promoted to type image. Type image is just a UML vernacular for some piece of information that management wants detail about, okay? So say, for example, management wants to know a little bit more about how the shipment of materials are going from raw materials into finished goods or from materials to products. Either one of those terms are correct. They would create a new conceptual structure that they term as this idea of being a type image. The type image is saying, we need to understand more information about this particular concept. What is a bill of materials? What information does it contain? So when you create a conceptual structure and it says this is promoted to type image, all that it's saying is saying management wants more information about what the transaction between raw materials and finished goods looks like. And that's actually what all this conceptual structure represents. Now, the only reason I mention this is it's a small little item and it's a small little characteristic, but there will be questions about this in the homework. So if you see something about type image, all the really type image means is that it's something management wants additional information about. All right, I said it was coming, and it's here. Look at it in all its glory. Okay, so remember I said that we had an integrated diagram, and do we have an integrated diagram for all three processes? We actually include this all together. Now, I do want to set your mind at ease once again, okay? I think on the homework, there's a question about creating an integrated UML diagram, and if you want to take a stab at it, more power to you. I don't think it's necessary for the homework, but on the exam, this is 100% not required to create this diagram here, all right? I've had students do that, and I said, good job, well done, okay? I don't give extra points for creating this diagram. I'm just going to say that this is something that we need to know how to interpret, but I'm not going to have you replicate. What is it that we need to understand about this diagram, though? This is the concept. This is all three of our conceptual diagrams integrated together, and there's some important points to take away with this particular diagram. The first most important point is that there are multiple class overlaps within our diagram, and so we need to specify each of those, okay? The first one is really, really easy. What class have we seen in all three diagrams? There's one class that exists in all three diagrams. Anybody remember which one it is or figure it out? That's our employee class. Employees are involved in purchases, they're involved in conversion, and they're involved in revenues. So that's why they're in the dead set middle, and they connect to all three process areas, okay? Now, we've got several other classes that are part of two of the three classes. So let's go ahead and go through those. When we talk about products, we talk about products being before processing. We're going to classify this as raw materials, okay? This is going to be our inventory that we have from the purchases. I think it's a good habit at this point to make sure you classify this as raw materials because that's what we're responsible for purchasing in a manufacturing environment. So the purchasing process is responsible for acquiring the raw materials, and our conversion process is responsible for converting the raw materials into our finished goods. So this is part of two process areas here. Products, similarly, are finished goods. You can actually term this as products or finished goods, either one. Either one is fine. But the products that are created, these are actually created as part of the conversion process. And then we know, as part of their sales, we sell these goods to customers. So the products are part of the conversion process and also part of the sales process. The final one is going to be cash. Cash is a little bit confusing because you'll notice it occurs right here and it's right next to the word conversion. Did we include cash in the conversion process? Let's go back. Do we see cash anywhere up here? No, because remember, we've already purchased the materials that we're going to have for use. And when we sell them, they go to a separate process area. So cash is not involved in this diagram. But where do we put it if we don't put it right in the middle here? Because we know it's involved in purchases and sales. Because we give up cash for goods we purchase, we have cash disbursements. And we collect cash when we sell goods. All right. So cash is connected to these two, even though it looks like it's part of conversion. All right. So that's kind of the integrated UML diagram. Anything else I didn't talk about, any of the other categories I talked about are unique to their process area. So purchases, suppliers, cash disbursements, those are all unique to the purchasing process. Cash receipts, sales, customers, these are all unique to the sales process. And conversion, material issuance, production authorization, and labor operations. Those are all unique there. I won't ask you to list out everything else in this UML diagram, but I will tell you right now, be very, very certain that you know which of our classes overlap into multiple areas. We talked about 4 of them. You should be very clear on all 4 of them and what process areas they overlap with. Okay. I don't think that's too much to ask. If you want to learn this entire diagram and can replicate it, again, I'll be super impressed. I'm not going to give you any additional credit, but I will think that's really cool that you could do that. Okay. That means you got a big future in UML diagramming, which I'm not sure how big a future that is, but still, you know, it's just something to do. All right, last thing to talk about. I do want to take a real quick look at this. We don't have a whole lot of time left, but I do want to take a quick look at this because we actually have the examples here of our conversion process controls. This relates to something we talked about on Monday. We talked about this table down here. So remember, we talked about our business rules and what the intentions are, what we're trying to prohibit, and then you notice that there's 2 different ways that this can actually play out in an IT system. There's going to be the access controls and the application controls. Now, just as a reminder, when we're looking for access controls, what word are we looking for? Employee, okay? What can the employee do? What are the limits? What are their parameters? What are their responsibilities? When we're talking about application controls, what word are we looking for? System, okay? Now, if you don't see those exact words, you're looking for the implication of those words. So you may see the word user, or you may see about the accounting information structure or something like that. There may be some reference to that. In the exam, I will try to give you exactly the vernacular that you need to look for. So if you're looking for access, you should be looking for the word employee. If you're looking for system or application control, look for system. So what's the example of this? Well, again, we identify our risk associated with authorizing production. Employee with proper authority authorizes production to ensure finished goods are available to meet demand. All right. So we want to make sure that anything that's above a certain threshold of production gets authorized. That's the action that takes place. The employee or the access control is basically, we want to make sure there's proper segregation of duties. Whoever's authorizing can actually modify inventory records. Remember segregation of duties? So we talked about it already. That picture of the car, CAR, custody, authorization, recording. We've actually got a separation here. Authorizing production cannot modify inventory records because inventory records is recording. Why would we want to have a separation here? Because we could have somebody who authorizes production and then doesn't actually record the production taking place and puts all those goods that were produced in the back of their car. Is that possible that could happen? No, it can't be happening. You know? Yeah, that happens all the time. Yeah, so good segregation of duties would be actually a good place there. That's the example of an access control. The application control. System must provide authorization, order number control, default values, range and limit checks, and also create an audit trail. So if something does happen, we want to know what was the justification for that action, what was the information associated with that production, and where can we find the details of that information of that production. So the system is more of a detective or corrective control in this particular scenario, but still very important for making sure that we have correct information in place. All right, that does it for today. Homework on Monday. Have a good weekend.